One of the areas that banks have increasingly becoming, aware of or viewing as a growth engine is SME banking or business banking, as some banks call it, right? The important aspect about SME banking, the fulcrum of it over the years has actually been how do you engage with your customers, your client engagement by the RMs, or the coverage. That's really been, let's say the fulcrum of SME banking. But what has happened over the years, in the last 5 years, should I say, the scale at which technology and digital has created the impact of building a large SME book has also resulted in challenges that how RMs and the RM coverage model has to keep up with. So just to give a point of view, RMs typically end up spending 40 to 60% of their time uh, on non-client activities, right? Which could be on data entry or servicing or reporting. It gets accentuated if there are manual processes, there are disconnected systems. It results essentially in efficiency leakage and maybe a limited portfolio coverage, right? And obviously, the branch RM models are um, becoming ancient. It's inefficient, especially if it's for smaller customers or digitally active customers. And basically, it limits also the ability to scale on a cost-effective basis. Now, where are the typical leakage areas that RMs end up with, in quote unquote non-client activities? As I said, it's on data entry and processing. It also is to a large extent on service requests and dealing with customer queries. A fair bit of it is on reports and compliance checks, and obviously there is a lot of routine engagements which are to do with manual follow-ups and checking in and so on and so forth, right? Now, if you were to actually really drive RM efficiency on a cost-effective manner, so you aren't actually scaling up your workforce as your book increases. You aren't actually looking to drive your RM coverage at the same rate, and you were to actually improve it. Then what could actually be, the levers that could help you in driving this? And that's the essence of this discussion, right? The first, which is very common and it's increasingly being adopted, is what we call as the virtual RM model, right? Where you have dedicated virtual RM hubs. It scales up to even up to 1,000 clients. It manages the scale of RM coverage very cost effectively, and especially in a era when you actually are driving phygital, then it reduces the need for a branch based interaction. It creates a high degree of let's say RM intimacy without necessarily making it physical, right? But the important aspect is that beyond the virtual RM, how do you actually look at other levers? Now, there are three or four interesting levers that you are seeing globally becoming trends, right? The first, obviously, is no prices for guessing. How do you actually enable AI and chatbots that makes it conversational, that provides 24/7 support, and it also improves, let's say, the response time, the service levels, and generally customer satisfaction. Now, that's actually let's say a low hanging fruit if you were to do that. The second interesting area is how do you really automate your workflow and have your CRM integration in place, right? Where you could help your lead assignments, tracked documentation followed up, ability to actually track your conversion and basically avoid manual tracking, which is an important aspect that could help in making your RM, engagement more effective. The third area, which is emerging as an important and quite a successful model, is how do you create specialist pods, right? So if you were to create central pods that actually manage specific, areas, could be lending, could be FX, could be insurance, then you actually are able to then enhance again the manual ability to actually drive a lot of these into a centralized digital model, and that's again a important area that banks should actually be seriously considering. And the last but certainly not least is how do you actually empower your customers to go through self-service journeys, right? When you actually create self-service journeys, then you are digitizing the customer journeys, the flows, which obviously results in lower operational cost and essentially also builds a much higher user engagement or a client engagement, right? Basically making the convenience factor go high. So essentially, if you had to do this, I think the point is you may not eliminate all the 40 to 50% of quote unquote non-client time of an RM, but you could reduce this significantly. I mean, at least by half, if not more, which obviously results in not only improving your coverage ratio, it reduces cost, it improves customer satisfaction, and because it is digital, it also improves controls, right? So, cost, customer, and controls.